Hey, welcome back, everyone. How are you all doing today? I hope you're doing amazing and I hope your week is faring well. All right, so in today's video, we're going to discuss a wide range of things. As usual, we're going to talk about the fundamentals, just a little, and then we're going to jump straight into the technicals, which we have a lot to discuss. Before then, let's take a look at what we have this week. First off, on the economic calendar. As you can see right here on Monday, which is today, I also apologize that the video is coming later because of one or two. There's a reason for that. But this is not a place to explain why. But moving forward, on Tuesday, which is tomorrow, if you're holding Canadian dollar pair, please you have to be watchful because we have the card GDP monthly release. Okay, the GDP domestic product is coming out and is expected to actually come lower than previous. It's forecasted down to 0.0%. That is not very good. But we see how that goes. On same tomorrow we have Jot Job opening. So this week is NFP week. So I mean we all have to be ready for NFP. So that said, on Wednesday we have ADP, we have core retail sales, and we have the ISM manufacturing PMI, all of that from the United States. On Thursday we have the unemployment claim, the usual initial jobless claim, also around the same as previous. So nothing super serious about that. However, if the actual come quite lower than this, then that is not good for the dollar. But if it comes higher than this, then that's pretty good. I mean, if it comes higher than this, that's not good for the dollar. If it comes lower than this, that's probably good for the dollar. But the labor data in the United States in general, in my own personal opinion, is not good. So, but we see how that initial jobless claim goes. All right. The elephant in the room is the NFP, okay, the average hourly earnings, from payroll, and the unemployment rate, okay. The unemployment rate is expected to come just as previous, 4.4%. Non-farm payroll is expected at 56K. That should be roughly around 170K or plus. Okay, not 70K plus new added job if this actually come as expected. But I don't think so because there are reports of new layoff from OpenAI and few other companies like that. So if you're getting a higher number of job added to the economy when some people are actually getting laid off, that's spooky to me. But this is not the first time spooky stuff will happen in the market, so we have to just get it as it comes and move on with it. So the same thing on average hourly earnings is actually forecasted down. That is not what I was expecting, considering the old stimulus thing. And I think maybe with the war being funding and the world keep going on and on without any exit plan, I guess that could be another reason why average earning is going down because I mean the United States citizens are not having the best time of their life at this moment. Because I mean it is what it is. But I guess we see how that goes. But I don't want to get too political about stuff like this. But again, let's focus on what the actual data comes out to be, and we can easily trade that because that is all that we have to work with in the market. So that said, this is how the data you might want to get ready for. These are the data you might want to prepare yourself towards. All right, so let's go straight into the soft setup right here. On Edge Finder, it looks super cool. If you're interested in that and you see a technical that fits into your system, I think you should go for it. What can we also talk? I think we should talk about silver. Silver is really -6, and that is very beautiful. And you might want to ask me, why did I say that? The major reason being, as you can see right here, on a technical perspective, it's quite bearish. Even though when you look at the crowd sentiment, we're talking about the retail sentiment, they are screaming bearish, and I don't like that. I don't like when I'm in the same direction as the retailers. I don't like it at all. So when it comes to silver, I took a short already, but it's a very small position because I'm still expecting another leg higher potentially. If that is something that would happen, I wouldn't mind taking it. But if that's not the case, then I wouldn't mind my trade to actually keep going down and down and down because I'm currently shorting. But anyway, whatever happen, we see into that. As you can see, institution they're going to be buying. As you can see, the COT net positioning, we have 78.55% net long, and the net short is around 21.45. And the net change, this simply means that the net change is positive 1.45%. that simply means that institution, the latest filing, they kind of added to their long positions and they closed a chunk of their short position. I mean, that is what that kind of like summarized there. So that's fair. When you look at the economy, it's not favoring silver at all. Manufacturing PMI, service PMI, none of these guys favor the bullishness of silver because I mean, these guys look super strong. So that means dollar would likely go up, and when dollar is strong, silver and gold most likely not going to be very strong. So you can get uh, you know, the contrary relationship between both assets as they are both safe haven commodities. I would say I don't want to call DXY commodity, but if you actually think about it, it's more like a commodity because you can hold it. So that's that. When it comes to the inflationary part of the economy, screaming bearish as well because the US economy has literally been like in a stagflated stance. They've been stagflated for a while now. As you can see, the PCE is at 3.1% like for the past 3 months, and CPI also has been like 2.4% for the past like 6 months, in my personal opinion. And also PPI is up and down, right? It's pretty much up and down, but again, it is not even close to what the Fed is projecting, what their plan is. So it is quite unstable. So that's why I call it stagflation. It's not super stagflated, but there's no excitement in the US inflationary data. So that's kind of the reason why I kind of call it stagflation. So I'm spending time on silver right now because I mean, which other asset are we going to spend so much time on if not gold and silver? Because that's what kind of make the most money in the market lately. And when you take a look at the labor data, for sure it's going to scream bullish because all of these guys actually scream bearish for the dollar itself, especially when you take a look at the NFP. You take a look at the initial jobless claim, the weekly jobless. I mean, this is the initial jobless claim. That's what I mean by the weekly jobless claim, right? The unemployment rate, the non-farm payroll, all of them scream super bearish for the dollar, as you can see the readings right here. However, we have NFP coming this week and is actually projected to actually come pretty hot. So that's put him in a very confined kind of environment because if we are getting a very bullish reading for NFP, that will be good for my position on silver actually. But again, I don't like surprises, and in the market you can't get enough surprise. So that's just our position right now on silver. So let's keep a close tab on everything. And on gold, I think gold is pretty neutral right now. Let's find that, and I don't blame it because on a technical perspective, it's pretty bearish in my personal opinion, but it's not as bearish enough for me to go for it, for me to take that call on short. So we see how that goes, and that is where I'm going to stop on the economic part. If not, we're just going to be here till tomorrow. And I mean, you don't want to be here till tomorrow, right? Because I don't think I want to be here till tomorrow either. So I think we're going to have fun. But again, let's continue with the session properly. So now let's talk about the dollar index. This is the daily time frame. We like to start with the daily time frame, right? And right here, last week we discussed the wave count, and I told you that there is a possibility that we could, in fact, get some juicy move on the dollar index. Meaning, if this corrective move, okay, this particular corrective move is a double zigzag pattern, then there is high possibility that we would likely get another leg to this particular region before the momentum continues. Okay, the bullish momentum continues. However, I think we have ABC, something like this, and then we have our X right here. So I would say we have W, X, and then we got another A, B, C. Okay, which can we can call this Y. So we have W, X, and Y, right? So which kind of like sum the whole ABC move up completely, but it's still when you take this to the 1 hour time frame, it's still more like a double zigzag pattern, in my personal opinion. And I love the fact that it is like that because it makes a lot of sense, and that's why I took a short on euro dollar. Okay, so since then we've seen a very good momentum all the way to the upside on the dollar index, and I would in fact be calling for another leg higher. When you take this to the daily time frame, you can see the momentum. It's crystal clear, right? We have higher high, higher low, 1, 2, 3, 4, 5, a new high, which makes our the wave three. Okay, and then we have another ABCD. Okay, I mean ABC kind of zigzag pattern to this particular region, double zigzag, which kind of make our fourth wave, and then we are expecting maybe a five wave all the way to the wave right here to complete the corrective wave, which is going to be a very big one when I go to the weekly time frame, which I don't want to go right now. But in my personal opinion, based on technical perspective, I think there's high possibility that we're going to get 102 region right here on dollar index in the next couple of days. And coupled with the fact that we also have NFP, we have retail sales, all these data are kind of like forecasted to come pretty higher than expected, which will be very, very good for dollar strength. With the fact that the geopolitics conflict in the Middle East still remain very, very important to the strength of the dollar. So when you put everything together, I think everything kind of screams strong dollar. And that's why when I was talking about Dow Jones earlier, I mean, I don't want to buy immediately, or it looks like something I want to buy. Before I jump into buying Dow Jones, I want to see some very serious weakness on the dollar. And right now, I'm not calling for any weakness. I mean, it looks like DXY will be breaking out of this particular range. All right, it looks like it's going to be breaking out of this 100 capsule. Right, this is the second time it's retesting in the last in March alone. This is the second time it's been retesting this 100.50 region, and that is very important. It's something you have to pay close attention to. Anything that makes it break above it will definitely gonna get 102. It might take a day or maybe a day and a half to get that 102 region. So, and that is where I'm calling. That's where I'm kind of like resting for now. Okay, and it also falls at the what happened in May 2025. So we're probably going back to 102 region, which is the supply zone or supply level or resistance level, whatever you want to call it, right? But it also falls at a very distinctive high since May 2025. So that looks super cool. I'm gonna keep a close tab on DXY. You should too if you're interested in FX trading or any major pairs. And we see how it goes in general. All right, we're gonna see how it goes. After that, let's talk about Bitcoin. I took a short on Bitcoin and then I added to it because I was trailing pretty tightly and I got taken out. Right. I got taken out around here on Bitcoin. Then I took another shot. Now, if you ask me what is my next plan on Bitcoin, I actually think that we could get a leg higher on Bitcoin back to this region, back to like that 72K region. Okay. And then maybe we're going to get the market to drop all the way down to 57 region that I've always wanted it to see. I've always wanted the market to get there. But maybe that is not going to happen also, and the market will just drop further to the downside. I mean, that is also a very good possibility. I mean, when you look at this very well, you see we have a form of a triangle correction right here. Okay, it is not the idealist kind of correction I like. Something like this. You can see what we have here. We have A, B, C. Okay, and then we have a deeper ABC, right? A deeper pullback, and then we have another ABC. Okay, so we can say we have W, X, and Y. Okay, so this is an ideal kind of pullback. I personally like double zigzag correction because when the market continues the trend, it makes a lot of sense. It gives you a very good opportunity to make so much money in the market to ride that kind of trend. I kind of took part in all of this. I closed my trade here. I didn't make the rest of this move. I took a shot around there and I make it at the same time I did on Solana and I shared with my guys. And that was around January, February, thereabout, because we actually aired this for like 3 weeks. So it was a very good one. Now, when you look at this particular corrective moves, I don't like it. It looks like a flag pattern. Yeah, it looks like a flag pattern. It looks decent enough too for me to take a shot, but again, I don't super duper like it. So maybe we're gonna get another leg to the upside right here before the market actually fall down to the bottom. But we kind of keep watching. But I'm still actively holding this particular trade on Bitcoin. So that's that. Euro dollar was a very beautiful one. I have another notification on silver. I guess silver is just about as you can see right here. You can see the notification right there. I mean, it's doing good. So let's keep watching. We're gonna talk about silver for sure. But before then, so what do we have on euro dollar? Euro dollar was I took a buy on euro dollar some time ago. I took a buy when the market came here, hoping that this is more like an ABC pattern. Okay, like ABC pattern. But what happened is the market moved a little to the upside and it came down. And that simply turned the whole thing to what? One, two, three. Excuse me, turn it to 1, 2, 3, 4, 5. Okay, so we're gonna have a massive, massive, a gigantic corrective move, okay, which is 1, 2, 3, 4, 5, back to 1.3570, or even lower, potentially to this particular region, okay, or even here, which is at 1.105. Okay, I don't want it to come back to 1.105 because that would potentially give sellers a kind of idea that, yeah, they can drive it lower, which I don't want them to have that kind of idea, because I still believe that we can see euro dollar above 1.2 in the nearest future. But then again, dollar has been pretty strong, so everything when you factor it together is quite tricky. However, I'm currently holding a short. As you can see, 1, 2, 3, 4, 5. We have a very distinctive ABC corrective wave on the 4-hour time frame right here. It's not even just ABC, it's in fact a double zigzag that I told you I like very well. All right. So we have a double zigzag corrective move to the upside. As you can see, we have ABC, X, ABC, and Y. All right. Sometimes this thing kind of just get mixed up a little. So you just have to focus on it. All right, so we have ABC corrective move to the upside. Double zigzag pattern looks very, very, very sweet. And I took a shot around there. I shared it in our signal page, and I think everybody's doing very well right now. We are currently trailing our stop on euro dollar, and I mean, nothing scream more leg to the downside on euro dollar, like exactly what we have on DXY, right? Because we are still expecting dollar index to come to like 102 region. So that could give euro dollar a very good opportunity to come all the way down to 1.35. Okay, and maybe from there we can see a rally to the upside. Potentially, I don't want to say it out loud, but potentially we can see dollar index, I mean euro dollar at 1.28. Okay, 1.28, somewhere around here potentially. But we have to look for a very decent, maybe something like a demand zone. Okay, anything like that. I don't know what's going on with my chart. It's not loading up. Okay, that's okay. I think it has. Sometimes stuff like this happen. I don't like it, but there's nothing I can do. It's trading view doing trading view stuff. Okay, and my internet doing my internet stuff as well. So we have a level right at the bottom here. I would like this to be feasible only on the 4-hour time frame, okay? Because I don't want it to be too clustered together on the daily. So I would like this to be like this on the 4-hour time frame. Let me clone it as well and put it somewhere around there. We also have another tiny little bitty demand right there on euro dollar, okay? This particular one here, this second one here, be very obvious. That is the one I'm talking about that we can call at 1.128. Okay. And that would be pretty obvious on the likes of 1 hour time frame, potentially 4-hour time frame as well, or maybe lower time frame from that. But on the daily, I don't want to see it at all. Okay, I just want to see something very distinctive. So back to euro dollar, which I never left actually. The daily, this trade is already running like 1.1 point, I mean 1.5% RR already. So we are trailing, I think around 0.5% right now. We're leaving this particular 1% to keep running. Maybe we get another move to the upside like this, back to this region, and then the market will drop all the way down to our TP right here. Considering whatever happened to the dollar tomorrow, between tomorrow and Friday, okay. So I'm not gonna be tightening my stop loss on this one. I will keep the trailing stop that I have going, and I will just see how it goes, because I mean the target is 1 ratio 2.5. So that's the risk to reward ratio on this one. So I think we can get it. So euro dollar, that is all I have on it. Aussie card, I'm still holding my short on Aussie card. But I didn't share this because it's an impulsive kind of an entry. And also it is me counter trending. Okay. I don't like to share counter trend trades, but it's a counter trend trade. So that is that. My internet is pretty much messed up right now. Let's see if I can switch it to something better. I think it's coming up, but it's pretty slow, and I don't like slow internet. But let's see how that goes. Let me manage it for like another 5 minutes. If it doesn't make sense, then I'll bug off. So that's that on Aussie card. It was an impulsive entry, but I wouldn't call this over yet. Okay, we've seen a very distinctive rally to the upside to make it with three. Maybe this is another one, two. Okay, ABC back to this region. Then we see another call all the way to the upside on Aussie card. And I mean, we shall see, right? But in my opinion, I think I will just hold on to this to see how it goes. My trailing stop was somewhere around here, so we see how that goes on Aussie card. But I'm not gonna suggest you to join that one. WTI. My internet is messed up. Let me see what I can do. WTI, okay, I think it's back. I mean, we're just gonna have to use it like that. So back on WTI, I took a buy based on what Trump said some time ago. Last week, we got this massive drop, and I was buying around here. So that kind of like take me out in a loss. So I took a fresh buy here, and so far we are all the way up. If you watch my last week video, you know that I took that buy on WTI. And so far, so good. I would probably be waiting for a little bit of a pullback back to like 92, and then we'll probably add to this particular position moving forward. So on this one, I'm pretty confident because again, I'm already trading my stop. So because this trade is already running like how many people? I mean, that's like 1.9%. So this is already a very good trade in my opinion. So nothing, and it's also 1:4. Okay, I'm targeting 170, 118 region. So it's a very good one. But we'll see how that goes in the next couple of days. Trump can just, I mean, you know what Trump does, right? So let me not say it. So let's hope would Trump won't happen to the street. I pray that Trump will not happen to the street. I mean, I'm praying. But let's see how that goes. Okay. Fingers crossed on WTI. So on gold, yes, so gold is a very beautiful one. And again, I took a buy. I think this buy already took me out last week around here when we got this massive dump, which I genuinely do not fancy, but it literally took me out. So the next plan on gold is to see a few leg higher, right? So when you look at gold on the daily time frame, okay, when we talk about gold, gold is at a very interesting level. So this is not the time to play with gold, especially if you're an intraday trader. You don't want to get trapped in a dramatic move. So first off, we saw what has been happening to gold in the last couple of months, in the last 8 months to be precise, when we saw gold just rally to the upside, pull back a little, rally to the upside, pull back a little, and rally to the upside. These are weird moves. And we know why all of this is happening, right? The Middle East conflict, right? The 12-day war that happened last year, June, okay, which kind of like pop this particular one up. And since then, the CME drama, everything combined together. But I guess since the Middle East conflict started, we've seen an headwave in the price of gold. You can see the structure we are getting at the top there. So, in my personal opinion, I think we're waiting for at least an ABC corrective wave. We're waiting for something like A, B, and maybe a C back to this particular region right here on gold. Okay. Now you might be like, bro, what are you talking about? You might be like, this is weird. This is a weird analysis. I know, right? But I'm following this C simply because of this particular extension, Fibonacci extension. However, I think the best that we can get from a C right here should be somewhere around 3,585 region. Okay, so right around there, I would say we've had a very pretty corrective wave. Then we can continue to the upside back to 7,000, as the case may be. Okay, but if I'm going to be very technical, I would say we can in fact see gold back at 3,441 region. Okay, now I'm being technical, but again, you have to, the market sometimes give you the full pullback, sometimes it doesn't. That's why I have 3441, and I'm talking about 3885. Okay, around this region right here, 3885 region, or an extended drop back to 3441. Okay, so those are the two regions that I would personally be looking to short gold to in the next couple of days. Now, do I want to jump into a short right now? Definitely not. Okay, as you can see, after all this move to the downside, this motive wave, the bearish motive wave, we're now seeing A, B, C. Okay, then we have X. So maybe we're gonna get another A, B, C. And this last leg, which will make it a double zigzag. Again, don't forget I said I love double zigzag a lot. Okay, which will make it double zigzag. That would literally fall at what's it called again? That would literally fall at this particular Fibonacci retracement level, 61.8, which is the golden ratio, right? So if we get it back to the golden ratio, that would make a whole lot of sense. But with what I'm saying right now, if we call this A, we call this B, and we are calling this C, this is not a good C. Okay. I think at best, what we can expect is maybe we've had our A here. This is our B here. All right. This is our B here, and potentially this is our C. And then we can say this wave 4 is completed, and potentially we're going to be waiting for gold to actually drop all the way back to, don't forget, these are the region 3885 or 3441. Okay, so that those are my regions for gold. Okay, to short to, if I'm gonna be shorting gold. So, but unless it comes all the way back to this particular Fibonacci retracement level, I'm talking about this region right here, a minute. Okay, we have this particular top here, and then let's adjust this a little bit closer. Okay, good. So right here, if I'm gonna be seeing good at 4669 or maybe 4800, okay, but it hasn't come there yet. It hasn't gotten there yet. So 4669 is a very good place to short gold, but a better place to short gold would be what? 4800, right around here, which will completely make this our what? Our double zigzag, which will make it C and 4, and then we can wait for that drop. I mean, this is a very good premium level to sell. I mean, extremely premium. All right. I mean, I wouldn't want to short right now. That would be too tricky. So that's why I didn't actually short gold yet. I'm still watching it very closely. But with time, I think we're gonna get a very good move on gold with time. So give yourself some break, just relax. Okay. Don't forget again, the levels are 4669 and 4800. And our target would be 3885, 3885 or 3441, right? Those will be our target. Now, you might not like what I'm saying, which is very normal, but on a technical perspective, that's what I'm saying. So I mean, don't blame me, blame technical analysis. All right. So that's that on gold. So let's jump straight into our alt watch today. I'm gonna be very fast right now because I've already spent so much time with you, which I really enjoyed. But again, I mean, we have so many things to do. Aussie Swedes, don't forget we've been talking about Aussie Swedes for a very long time. Let me go to the daily time frame. I'm not going to be selling Aussie Swedes as well. It is not super ready yet. Okay, especially when you use the Fibonacci. Let's see what we have on Fibonacci. So right here, I think, yeah. I'm not sure I want to short Aussie Swedes yet, to be honest. But then again, we've already seen it back above the 50% Fibonacci. What I'm waiting for is maybe we can get 61.8. Okay, potentially, if we can get all the sweets to this region and give me a very nice and decent divergence, I'll be selling it maybe till October. Honestly, I will hold it. Okay, I will hold it through a period like this. I will hold it through a period like this, to be honest with you. So, but right now, I don't think I want to jump into a short right now. Okay, it still looks super corrective to me. It still looks like it's in the mood to correct, to continue this particular correction. So I'll keep watching. I don't know why I'm very much interested in all the Swiss. It's a very weird pair, but then again, when it's good, right? And coupled with the fact that Australian Reserve Bank of Australia also just cut their rate by 25 basis points, which kind of leave the whole thing at 2%. And this is RBA, okay? And this is Swiss National Bank with their interest rate at 0%. So even if I'm shorting this, selling Aussie against uh, Switzerland, Switzerland franc, Swiss franc. So that would still be negative swap, but the negativity of it will not be too much for me to bear. So I guess that's also a big part. But I used to tell you guys that when it comes to Aussie Swiss, Pound Swiss, Kiwi Swiss, I'm not the guy that will be buying those guys. Okay, when they are buying, they buy in a very horrific manner. But when they are selling, they sell in a very glorious way. Okay, you can see the way they sell right here. It's a very glorious shot. Okay, but when you're buying it, it is horrific. You will get you cannot trail it. You will get trailer, you get stopped out so many times, then you will get pissed off. Okay, so I will prefer shorting them. If you look back in time, when they are selling, they sell so massively and very, very fast. If you don't get emotional, okay, because they can give so much money. So that is just that, anyways. I'm just out there just sharing one or two with you. Yeah, so Aussie dollar, don't forget we had so many things to talk about Aussie dollar some time ago now, but so far so good. I think we've seen some very good setup on Aussie dollar, and I would be considering buying Aussie dollar. I want to see it come back here. This is an extreme level. I'm talking about 0.786 Fibonacci level. Okay, so I mean, again, I'm expecting dollar to make another leg higher, right? Back to 102. So it's just normal for me to expect a pullback back to this region on Aussie dollar and then drop back to, around that 0.677 for the region. And I'll be looking to buy Aussie dollar from there. Okay, so for now, I'm still kind of like chilling on this one. No pressure yet, but I have my eyes on it. Okay, I have my eyes on it. Swiss franc, this is the one I said is very dramatic. This is the one I got a notification for earlier today. I took a buy around here. I'm still holding it though, and I added another one today because why not? Okay, at large, I'm very bullish on Swiss yen. Okay, no matter where you buy from, you'll make money eventually. Okay, it's just like the other side of pair like Aussie Swiss and yen that I love to short. When it comes to Swiss yen, I love to buy it. Like, I mean, you make better money when you're buying, but you can face some very crazy drop like this sometimes. Okay, like what I did today, I got the market back here. I mean, even in our signal page, everybody was making good money, and then we trailed to this region, and then we got stopped out. I think today, so that's just fine. But I told them if you want to hold it. If you want to let it go, let it go. Okay, leave your trading stop and just get stopped out, which is fair. But we know that we're all gonna make it back from euro dollar and the likes. Okay, so that's pretty fair. But again, you know when you've seen a very good profit like 1% plus, and then you see everything actually just went back to zero, or maybe some loss, you kind of get emotional, and I feel for them sometimes, especially for beginners among them. I really feel for them. But what can I do, right? I'm not the owner of the market, so we have to keep trading. We have to keep doing what we do every day and night. So anyways, I'm very sure they will grow into understanding the whole dynamics of the market, and the next time something like this happen, they will move past it and they will be better off because of it. So Switzerland, I'm still holding a buy. Okay, it's a very tricky buy though, but we see how that goes. In my opinion, I think where I'm drawing the line is around this region, honestly, around that 197 region right here. Okay, if the market comes down and break below this 187, I'll probably take a pause and wait for buy around 192 or 189. And while I'm waiting for buy around this region, I would definitely be selling because that will make it what? That'll make it something like, A, B. I mean, 1, 2, and we have 1, 2. Excuse me, we have 1, 2, 1, 2, 3, 4, 5, 3, 1, 2, 3. Then we have 1, 2, 3, 4, 5. So, with 5 right here, then we're gonna be looking for buy opportunity moving forward. But in my personal opinion, I will definitely be shorting the wave 3 and the wave 5 all the way to around 189 region before I start looking for buy opportunity moving forward on Switzerland. But first off, this particular level right here at 197 has got to go first. If it's broken, then we start looking for short opportunity. But so far it's not broken, I will keep the buy going. All right, you know how I do it. So that's just how it goes. So again, Ethereum, I had to adjust Ethereum a little bit because Ethereum kind of like it seems like something that is ranging right now, and I don't really fancy the range. I don't really like it, but there's nothing I can do. But we have something like a channel around here. We have a channel somewhere around here. Yeah, yes, we have a channel around here. It's a very decent channel, but it got broken last week and now it's been retested. Okay, you can see it got broken last week, it was retested, and now it's rejecting it. Should I sell now? No, no, I'm not gonna sell now. We've already discussed Bitcoin that I'm expecting another leg higher, probably back to the supply zone on Ethereum So, or maybe we can even get another leg higher, like back to 2,400 region, before we sell it all the way down to 1,500 or even 1,300 in the next couple of days. Okay. So right now, I'm just gonna chill on Ethereum. We see how that goes, but I would not suggest a swing sell at the bottom here. But if you are an intraday trader, you might look into a quick graph of short sell and enjoy the 1,500 as it comes. Okay. Pound USD. Oof. Talk about something very juicy. Although I still don't quite understand the whole structure personally, but I would say that we have one, two, three, four, five. We have three, and then our with five is going as is one, two, three. These are with four. So we have one, two, we have three, we have four. Now we are waiting for five, okay, with an ending diagonal if possible. So we can look for buy on pound dollar at 1.3032 region. Okay, this will be the region where I'll be looking for buy opportunity on pound USD. Okay, if that is the case, I mean, you will see me when I take the trade. But for now, everything still looks pretty decent. And I mean, we could have shot, right? But oof, nobody knows, right? I was actually still fixating on a bullish momentum because it almost retested this region and I got a divergence here. So I took a buy, I was trailed out, but then again, I was waiting for a break above here so I can buy again. But I couldn't take the shot. It is just not ideal for me. It doesn't make sense. That's just that. But euro dollar was a better one, so I was able to take that one. But anyways, the plan on pound dollar. Let's plot Fibonacci on pound dollar to see what we can start looking for buy opportunity. One, two, three, four, five. Right, 1, 3, 4, 5 right there. So maybe around here, back here, okay, somewhere around that region. Yes, I think we could start looking for a buy opportunity on pound dollar. As a matter of fact, any moment from now, okay. But I would prefer this region honestly because of the demand cluster here. Okay, cluster of demand here. So maybe, okay, around that 1.3032. Okay, we've already discussed that. I already said it. So maybe if market come back down to this region right here, maybe we look for buy opportunity based on the price action right around this year. I mean, around this particular region would determine what will tell us how we jump into the trade. Okay, so no pressure. We're not in a hurry or anything. So we're gonna have to wait to see how that goes. NZD dollar also very much approaching a very buy region. Okay, a very good buy region, and I already have a divergence. I mean, I almost took a buy on NZD dollar this morning. I'm not gonna lie to you, but when I had to go back to my wave count on, I think right here, yeah, the wave count around here. I have to come back here to see what is going on. Where is DXY? I don't have DXY here, whatever. But I have to come back to the wave count on DXY to really know, like, is it ready? Is it time yet to buy? But we're still expecting another leg higher on DXY. So that is a very tricky one, and I don't want to go against the structure. So let's see how that goes. But I'm very much ready to look for buy on NZD, even though on the weekly band this pair is more like in a range, but when you look at it on the monthly time frame, you see that it's more like in a it's pretty much like it's on its way to a correction, okay, of this particular lower low, lower high, lower low, lower high, lower low. It's more like on its way to a corrective wave, like an ABC of sorts, back to this region. Then we see the market drop down again. You understand? And there's no way to actually measure what happened back in 1970s. Okay, we don't even know if these are just some AI stuff. Okay, but if I'm gonna focus on an actual move, I would say from 2000. Okay, from 2000, we've seen higher highs, higher low, higher high, a deeper low right here, higher high, and the market seems to be in a corrective wave, and potentially we can see the market going back up. Honestly, okay, if you ask me. But then again, we have to be cautious. Okay, we have to be cautious. The market is comfortably sitting on a demand since 2020 right here, on a very strong demand right here since 2020. So maybe right here and the market jump up or just break down and sell off for the next for another like another 5 years or so. So guys, let's just chillax. Okay. But I'll be looking for buy on NZD on the daily band. Okay. I'll be looking for it. But it's a range pair and it's a very comfortable pair if you know how to trade it. Dollar Swiss, I want to short dollar Swiss. Again, anything Swiss dollar, I want to sell it. Okay, all the Swiss, pound Swiss, I want to sell them. If you look at this on the monthly, it's a clear and glaring bearish momentum on the 6 month band as well. It is bearish. You don't have to do anything. It's like the easiest asset to trade when we talk about Aussie Swiss, Pound Swiss, Euro Swiss, and the likes of Dollar Swiss. I'm being serious right now, guys. They are very easy to trade. You just have to sell. You just have to wait for a very premium correction, like a very, very premium correction, and then you look for short opportunity. Okay, but you have to wait because their correction sometimes can take months. Like this particular correction right now, it took how many months? From I think August 2024 to like March 2025, like February, March 2025. That is like 8 months plus. Okay, like August, September, October, November, December, January, February, March. That's like 8 months, so to speak, before it started dropping. So you need to understand how this particular and the same thing happened here. The same thing happened here. And then after that, the market will just fall flat to the downside. So it looks like that's exactly what is happening here again. Okay, potentially we can even see another leg higher back to this particular June high before we see the market drop, okay, on USDCHF. So I'm just kind of like waiting for dollar Swiss right now, and then I'll be shorting it when the time is right. On the 4 hour band, if you count this wave, okay, we have um excuse me, we have ABC, we have X, and then we have another ABC, and then we have Y. Okay, so we have ABC, W, X, and Y. All right. So it's a very decent one. So we have B, and then we have C right above here. So it is quite simple in my personal opinion, but getting into it is very tricky. You don't want to get in too early, you don't want to get in too late because that's gonna trap you in, and then you might lose your head, lose your sanity before the market started dropping. Because eventually they always drop. All right, eventually they always drop. So dollar Swiss, I'm waiting for a short opportunity, and as you can see, it's even back to 78.6 Fibonacci retracement level. Right, very wild stuff to happen. So maybe around here or maybe around here, maybe 100% pullback. I mean, that will not be surprising. It's never going to be surprising when it comes to this dollar Swiss kind of pair. But the issue was we could have taken a buy right here, considering that we saw a very decent higher highs and higher lows. But it's counterintuitive to my kind of setup, so I just couldn't take it. But I saw it, okay, I saw it, but I couldn't take it, and also is in this particular channel, right? It's a very bearish channel. So going against this whole structure will mean me just trying to go after nothing, or maybe trying to pursue the sun, and that would be very, very weird. Okay, so I didn't do that, and I'm actually happy that I didn't. But it's all good. I'll be selling later when the time is right. I'll share it with you for sure. Let's wrap it up with silver. Silver. I told you I took a trade on silver. So let's break it down. We already have an idea of what to talk about on silver. Again, we are in a corrective wave. Okay, A, B, C. Okay, back to $50 or $45. Correction. Okay, back to the November low right here. Okay, that is where I will potentially be looking to buy silver from moving forward. However, we also have 55 region right here. Okay, 55 region right here that could also call for a massive rally to the upside. Consider the fact that we have resistance, and right here we're going to be having a support, which is a very good key zone. So 55 region, we can look for buy, and then we have 50 and 45. Okay, so 55, 50, and 45 region, those are the levels I'll be selling to. Okay, however, what makes this quite different from gold is the fact that it comes to the m- the medium Fibonacci level, which is 50% Fibonacci. Okay, so it touched it very, very sharply and then it rejected it. Now, is that the end of it? I don't think so. Okay, in the next couple of days, especially if gold end up actually making that next run to the upside, we can in fact see silver also follow suit. Okay, back to this region before the selling continues, and that's why this trade is very small. I'll be trading very, very, very tightly, and I will not actually suggest you join right now because, in my personal opinion, I still think that we could get another leg to the upside right there before silver actually drops. And don't forget the readings on Edge Finder. Okay, on silver. Okay, on silver right here we have a -6. Okay, quite bearish, and we've discussed this at length, so I think that's fair enough. I guess we just have to wait right now. All right, that's all. That's the best we can do. We have to wait for silver on the technical perspective. And I've already taken it, but I mean, there's still more waiting to be done because I don't think this is the final correction. As you can see, this is A, B, C. I don't think this is the end of wave 4. Okay, it should be put there. I think that's the end of wave 4. I think we can still get something. I think this is X. We can still get like A, B, and C right around here. Okay, and then we can now wait for what the market to sell off on silver. Now, me saying sell off doesn't mean you should jump into it because selling, I'm still at large bullish on silver. Don't forget 55, 50, and 54. I mean 45 region. Those are the region to look for buy opportunity on silver in the coming days. Okay, so please stay safe, watch out. I'll see you in the next one. Have a good day.